Good morning, everyone, and welcome to the second webinar of the Seamless East Africa webinar series. So today we have a 60-minute panel discussion entitled Fast Track Your Digital Bank Whilst Ensuring Happy Customers. We're lucky to be joined by 5 industry experts on the panel who've kindly agreed to share their insights as we discuss all things digital banking. So joining us as panelists, we have Hartnell Ndungi, who is the Chief Data Officer at Absa Bank Kenya, Kevin Rudahinduka, who is the Transformation Programme Director at Bank of Kigali, Rwanda. We have Stephen Kagaruki, who is the Head of Innovation and Digital Transformation at CRDB Bank, Tanzania, and Salome Makau, who's the Senior Business Leader, SSA for Visa. And moderating the session for us today, we have Darren Frank, who is the Founder and CEO of Talent in the Cloud. So in a moment, I'd like to hand over to Darren so that we can get started. And before I do that, can I ask all of our panelists to turn their microphones on? And whilst everyone does that, I'd just like to remind all webinar attendees that you can ask questions throughout the panel session and our panelists will do their best to answer them. So without further ado, Darren, over to you.
Good morning. Thank you very much for the kind introduction, and hello to everyone from wherever you're joining, from whichever bedrooms or lounges or cupboards you're joining from today. Surreal times, as I think we keep saying. I'd first like to introduce our panelists today, and then I'm going to give a quick introduction, and we're going to go straight into to this session. So if I may, ladies first, Salome, would you care to start? Maybe give us a quick introduction, tell us a bit about you and your role at Visa.
Okay, good morning, everyone. So my name is Salome. I'm based at the Visa Nairobi office, but I look after Southern African countries and now also acting the country manager for Kenya. I started off in banking, but I'm actually very passionate about payments. So for Visa, I look after the general payments business in this market.
Very good, thank you very much. Stephen, over to you.
Thank you very much. Good morning, everyone. My name is Stephen Kagaruki, heading the Innovation and Digital Transformation at CRDB Tanzania. Based in Dar es Salaam, we have some few operations in Burundi, but we are fully based in Tanzania, extending throughout all the regions in the country. My background comes from development background, and I have a mix of both the telecommunication and the banking industry, focusing on the transformation of the old culture of banking to the new digital experience and customer experience, and transforming the customer journey and the like. Yeah, so that's where I'm coming from. Yeah.
Brilliant. Thank you very much, Stephen. Kevin, after you.
Morning, everyone. It's good to be on the forum this morning. My name is Kevin Rudahinduka. I'm based in Kigali, Rwanda. We tend to call it the Switzerland of Africa. So that's where I'm based. And, you know, I work for Bank of Kigali as the bank. It's the PLC. And my role at the moment is transformation. So I deal with digital transformation and basically seeing how, you know, today we cope up with with COVID. I think it has become one of my other add-on of scope of work, and how quickly we can basically embrace and support. My background is more in information technology. I'm more enthusiast and experienced in the area of payments or digital banking area. And you know, it's been a good challenge to have today, but also I think it's never going to be the same. So I really look forward to this session.
Great, thank you, Kevin. I think we've all had scope creep in our roles over the last 3 months or so, haven't we? So thank you. We'll delve into that a bit later on. Hartnell, would you care to introduce yourself?
Thank you, Darren. So my name is Hartnell. I'm the Chief Data Officer at Absa Bank PLC in Kenya. My specialty mostly has been in data analytics, artificial intelligence. I've grown my career mostly from the IT background, and I ventured into data some years back. This is the second stint I'm having for a large bank, a top tier bank with regards to data transformation. I've worked also with digital strategies before, helped other teams be able to set up foundation to actually make them accelerate from brick and mortar institutions to digital transformed organizations. So looking forward to share my insights both on digital and data today.
Fantastic. Thank you very much, everyone. So as a quick introduction, just to recap, what we're looking at, what we're exploring today is how to fast track a digital bank or your digital bank whilst ensuring happy customers. And before we get into the questions, I thought I'd just share a very anecdotal story with you, literally a minute or two, not necessarily as a sort of an industry insider, but as a consumer. About a year or so ago, I have a business in the UK, and one of our accounts is with a neobank or with a challenger bank, and I had a pretty horrific experience as a customer, whereby we had an inwards remittance getting paid from Kenya into the UK, and this payment had just disappeared, and you know, for a large chunk of money, and having to speak to the bank or trying to speak to this challenger bank. The reluctance to speak to, and I mean physically speak to, their customer was just overwhelming. It got to the point where I had an email or a live chat exchange where the operator on the other side categorically told me and put this in writing that it was their company policy not to speak to customers. Now, listen, I think when we were talking about creating banks and challenger banks or neobanks or whatever we want to call them, consumers have to come first. And I think especially on the continent, if we are looking at the underbanked or the unbanked, trying to get you know, this LSM into the banking sort of ecosystem, trust is a huge thing. You know, a few dollars here or a payment missed, you know, is catastrophic for people, and that will just, you know, completely destroy any type of trust that they may have or loyalty they may have with your brand, so, or your bank. So that's kind of setting the scene. That was me as a consumer. I did put this on LinkedIn about a year ago, and I think it was one of my highest ever performing posts. I think it had over 100,000 views or something. So clearly resonated with a lot of people, and I actually managed to get a phone number in the end. But anyway, we're not here to talk about me moaning as a consumer. We're here to talk to these industry experts about how they're fast tracking the bank and how they're ensuring happy customers. And I think we're going to split this into two. And Stephen, I'd like to start with you, if we may. We were talking about fast tracking the bank, and given, you know, that the continent and pretty much the world is very, very heavily regulated, how do we work, or how do you work with regulators to try and fast track? And what does fast track mean in your world?
Sure. Darren, as you had just put this forward, actually, I think during this the COVID-19 situation, we are facing, this will be a game changer on how you approach the fast tracking game. But we should move back and remember that as banks, we have been trying to roll out the transformation. We have been trying to convert our customer to the digital channel, but it was us driving this. So as we are trying to fast track this, we need to have one point in mind, that this is the time where customer want it themselves. So there is a need of the bank on looking on this as an advantage of doing the transformation. So within this window, there is need to transform fast because customers are waiting and they will accept. But based on the situation, I think there is need to refocus the resource on the right initiative, because I believe at the beginning of every financial year, people have different strategies they were trying to roll out and all that, but neither of the boardroom was COVID-19 one of the factors. So there is a possibility the strategies that was being set in the boardroom are somehow irrelevant. So in order to fast track something, you need to have people concentrated on the right initiative so that the energy is focusing somewhere. So there is need to go beyond the crisis mentality and go strategic. So people might need to review their strategies that a lot of resource and effort are focusing on, and to focus on the strategies that are valid with respect to the present and the post-COVID-19 initiative. And should focus on both the present and the post COVID-19 initiative, because and then this will make sure we have the right effort and resource focusing on the right areas where we need to fast track. That's a first. But on the second part, we might need to organize the resource for agility. That is key, because having the right initiative in place will be one, but fast tracking is a bit tricky. So we need to get three things right. We need to have the right priority in place, and then we need to have the decision process fast tracked. We need to be able to make decision fast, but we need also to be able to execute at the right speed. So this being the case, I see the possibility of having the multidisciplinary team sitting together as something you cannot avoid. So in the agile organization, this called squads, and on the bureaucratic and the hierarchical organization, maybe they can assemble what we call a task force. So whichever way, but we need to have people gathered together with the right priority and the right speed. This is the time where customers are waiting for digital to come on board and them to try using, instead of working on a lot of digital strategies and pushing forever for customer to adapt. So yeah. So,
and Stephen, that's an interesting point. If I may just elaborate slightly, and maybe bring Hartnell and Salome into this as well. We're talking about agility, and with all due respect to banks aren't aren't known for their agile approach, especially to digital transformation. There tends to be plans in place, but these plans take years to roll out. Now it's a case of, listen, we have to react to the situation and to our consumers. Hartnell, from your side at ABSA, how have you, maybe ABSA is more of an agile business, I don't know, but how have you adapted to this situation and fast-tracked your digital initiatives?
Yeah, so from my situation, we have approached this in the following way. First, we have tried to create a task force which has all multidisciplines, in order to make sure we have all the right people from the governance point, from the risk point, from the business priority point, from finance and all that, so that we have one room for the decision making and moving forward fast. So this has been very critical, but there are also some approach that we have decided to use in order to look on how to strategize. So we have tried to look on the COVID-19 situation with respect to customer requirement, but we have also tried to look on post-COVID-19 implication. So when you're looking on because the way you have said about the customer, previous plans were looking more on profit, the way you have said, making money, creating profit, and all that. But now things have changed. We have customer on board, we have customers' money, and we need to serve the customer during this time, irregardless, because customer need the service. So we are trying to look on how much, with the social distancing situation, how much services can be pushed to customer remotely, so that with the respect, despite of the social distance mechanism and the contactless situation, how much capability we can make the customer be able to access remotely. If it's a matter of payments, yeah.
Stephen, sorry, I'm just going to bring Hartnell into this, if I may, as well. So, Hartnell, from ABSA's perspective, any synergies with what Stephen's doing over in Rwanda?
Yeah.
Sorry, Tanzania.
Yes, I can actually build upon that. Yeah, so I can actually build upon that.
Yeah,
there are two ways of looking at it. So the first one, sorry, I don't know if you can hear me.
Yeah, please, Hartnell, we can. Please go ahead.
Yeah, so there are two ways of looking at this. The first one is the reactive approach. Remember, COVID is an unprecedented occurrence, and you actually should be able to ensure businesses are able to continue delivering their services. And number two is the strategic aspect of it. So we took it in a two-pronged approach. Number one, the reaction part was being able to ensure that customers are able to fully utilize the digital channels. We are able to educate and inform customers that they should be now moving away from going to branches and handling paper money through digital channels and using their cards, which is the reactive part of it. But we have to take a step back and actually look at what is the strategic outlay of this. Remember, in such kind of pandemic or such kind of times, if you look at the 2008 financial crisis, what happens is that we don't get back to normal. We actually transform. And if you're actually having any bank or organization not really looking at changing their strategy right now, then you are standing at a very high risk of being disrupted after this settles down. So what you've decided to do is that as the reaction goes on, which is ensuring that the lights are kept on, we are running a two-speed organization. And by two-speed, I mean that the team that continues understanding how to ensure that operations still are running smoothly continues doing their work, but we are picking and cherry-picking top specialties within different teams to actually form Scrum teams or agile teams that are able to envision and look at priority items we should be trying to change going forward. So how we are getting our priority list is by one, looking at the customer journeys. We go out and are able to observe how customers are moving from their conventional systems to the digital channels. We are looking at new kinds of products, and we have come up with 8 priority customer journeys, and each has a specific Scrum Master who runs on a continuous basis. So we have given ourselves 8 weeks to actually move from empathy, ideation, to having a prototype and rolling this out. We are bringing people from IT, product owners and business owners who understand their conventional products. And we are happy to already start launching new products in the market. So if you look at some of the products the bank has been able to launch specifically in Kenya is the ABSA One product, which allows you to have one account and one card that can do anything that you want to do across different banking services. So my comment on this is mostly we have to take a two-pronged approach. Being reactive is good, but you have to take a step back and see how do we amend and how do we tweak our strategies to make sure that we are actually prepared for the transformation that's going to happen in the next few weeks or next few months.
Great, thank you very much. Salome, I'm going to bring you into this. Obviously, you know, move away from cash is great for Visa, but perhaps you can talk to us a little bit more about how Visa is positioning themselves for digital acceleration and perhaps helping some of the banks and some of the other financial institutions to transform and to be agile.
Okay, thanks, Darren. I think the digital journey actually started a while back. And while before, maybe for banks and who are our key clients and our anchor partners, it was a feel-good kind of thing to be looked as being innovative and being open on the digital channels. The fact of the matter is, banks in general have started getting challenges, and some challenges are from the telco, but also challenges from neobanks that are coming up purely digital and challenging a space that the banks previously owned. So at Visa, we recognize that the journey started a while back. The COVID situation has just brought this to the fore. And just to give you an example of what we did for the digital in the digital space, in 2018, for the bigger region, Central and Eastern Europe, Middle East, and Africa, we developed what we call enabling digital commerce roadmap, and it had different timelines that we encouraged our clients to jump onto. And one was to do with contactless payments, which COVID has actually presented an opportunity that contactless can be accelerated. Another was to do with QR payments, which was fundamentally a change in the way you pay with your card. In this case, it's a client pushing payments from their source of funds, whatever source of funds they have, to pay for goods and services. So that's also on the digital roadmap. We also talked about risk because you started the conversation by asking about how are we engaging with regulators. Regulators just want to know that consumers are protected. So anything new coming on must address the risk aspects, and for sure digital opens up risky bits. So as we are innovating, are we also taking care of the potential risk that this also brings? So the digital roadmap had about 8 elements that were to prepare the banks for the future. Now, the future got here a lot sooner than we thought in the name of COVID. And the banks that were already in the process, should I say, reaping the benefits. Different markets are in different stages of particularly contactless or QR payment. So that helps. But I also want to comment on what should drive this, and what should drive this actually is the consumer need. We did a study of up to December 2019 on global trends and digital trends, and the people we interviewed across the globe, some 17 countries in Africa, it was Kenya that were interviewed. Three things came up. One, they want value on the digital channel. They want innovation, because innovation creates an excitement, and innovation is different things depending on which country you are at. In some markets that are more nascent on digital, it's what fancy things can I do on my mobile. In other markets is the tap to pay with my phone or with wearables, that kind of thing. But then also the third thing that came up is trust. I'm getting all sorts of error messages. Can you still hear me?
We can. Yes, I can still hear you.
Okay.
Yes, we can. Go on.
All right. So the third thing was trust. The consumers still need to know they have to trust that their bank is taking care of their money. And I mean, money is very personal to everybody. So to like the anecdotal experience you gave, Darren, I want to know that from the start of my journey with the bank to the end, I can actually already reach somebody to talk to. So that's how e-commerce thrives. I'm just online, I'm making a payment. The merchant needs to be sure they are paid, but the consumer also needs to know that they will get their goods and services. So as we sit and develop the teams that are going to accelerate digital, we must think end to end, what is the digital consumer journey? Start with describing what do we think the consumer wants? Because nobody wakes up in the morning to think, today I'm going to be interacting with bank X or scheme Y. What they want to do is, I need to get to work. I need to prepare breakfast for my children. So it's up to us to be to know that at that interaction point with the consumer, for me, it's a Visa card or a Visa credential that is being used. So as we're developing digital strategies, we must start from one, how is the customer acquisition? How is the onboarding process? How is it fulfilled? How do I get to load money on my account remotely? How can I spend if I open an account immediately? Now, do I have a tool to spend money? Can I pay for goods and services? Can I do a P2P transaction, because all this is digital? And then at the end of it all, am I protected? If, for instance, the Nando's was not delivered, who do I talk to? Can I digitally raise a complaint? Am I reasonably sure it will be attended to? Are my funds safe? So as we are looking at digital bank, the lens to wear here is the consumer lens, and from that, everything else will progress. Yeah.
And that ties in, I think, very nicely to the next part of this session, which is talking about the sort of ensuring customer happiness. Just before we go into that part of the conversation, I'd like to bring Kevin in from Bank of Kigali. So, what are you seeing in Rwanda? From what Salome was talking about in terms of innovation, giving value and trust, are they the sorts of things that are fast tracking your bank's digital journey?
Thank you, Darren. I think, yes, I would definitely contribute more to what Salome mentioned, and we see a lot of initiatives so far that have impacted the market. So us being the largest commercial bank, or maybe universal bank on the market, where we serve basically pretty much every industry, and being more also the biggest aggregator of payments for government services, we've seen a lot of drive before, using digital payments specifically from a government point. But now when this situation came in, everything just shot into the roof, because the government now was like, no cash, limit fees, remove actually fees. We've pretty much removed fees on all particular transfers to mobile to pretty much anything. I think the one we haven't yet managed to do, and what merchants keep complaining about, is the MDR or merchant fees, which I think eventually also that will get affected. But we've seen definitely a lot of the drive to use online payments, but at the same time, there's still a lot of gaps within the market. As far as technology is concerned, to be honest, I don't think there's any gap within the space of technology at the moment, but I think it's more for us, how as banks, how do we quickly adopt? I think Hartnell talked about running 2-speed IT. I think for us, we run almost, I think, 3-speed IT to be able to try to quickly to see how we can fast track to jump on all these things. But I think for me, the biggest challenge in all this, of course, there is the customer who we need to meet, who we need to get to. The demand is going to, of course, go higher now. People now will start maybe appreciating things that they had never thought of using before, because they just don't want to change. So they have always used to walking to the bank, but now because that option is not there, they try the alternative. But with the alternative now, it pushes the whole human-centered design to look at and say, how are humans interacting with this? And for me, I see particularly 3 main challenges that as we go forward, we need to address. The question is, how quickly can you be able to bring a solution on the market, considering that some of us, we are financial institutions we've been in the market for the last almost 55 years. So we have other banks that are older than us, but the question, there's always a cultural legacy and systems and everything that has to change. So the question is, how quickly can you be able to change? You find many of the big institutions, you want to do everything for yourself by yourself. Maybe the models have to start changing. Maybe I need to come to talent in cloud, and maybe outsource certain elements to quickly be able to move certain stuff, because now the customer won't wait. They won't wait for these projects, that some of them that we do for a year. It's a solution that has to come within a sprint, 2 weeks, you gotta spin it out. But at the same time, there's a challenge to get to that level if your whole organization is not working in that particular agile mechanism to get to. So it's not just one unit trying to act agile. At the end of the day, the whole engine needs to work agile. So I see that as a big challenge. The other second big challenge I see, I don't think, first of all, we have big challenges when it comes to payments. I think it's, again, the way we've implemented them, or fragmentation. We just need to be able to use the best of what is available in the market. But I think the biggest challenge in all the payments we have is the digital identity. Yeah. If the digital identity is not addressed across, it affects all of us, because how do I know that someone has done a transaction and there's a dispute, and I need to know who it is, and the whole repudiation process becomes just very difficult. So I think that's one area, as all the industry, we need to look at and try to address in terms of how we bring in that element, because it wraps up everything as far as how the customer is using the different touch points. And then the other element that we need to, that we see as a big challenge, or at least that we need to tackle, again, is about the whole data, privacy. Yeah. So with this whole thing, I can say maybe my kids now are on the devices, and I think if I wanted to attack anyone, I'll just now attack the kids, and then I'll get into any of your companies. So there's a lot of now change in terms of how we need to view, I think, specifically in this part of the world, in Africa, where usually, of course, we've not really paid, I would say, much attention to that. So I think privacy of data is going to become a key issue, and hence this is where also the governments are coming in. Where is my data sitting? Why am I processing my data in a certain cloud? Personalized. So these are the things that for us to quickly resolve problems, they also need to get resolved. If they don't get resolved, then we will have to rely on local demand. On local supply. But at the same time, the local supply won't scale so much depending on also their supply chain. I was discussing with a friend, some colleagues, and I was saying that if typically in Rwanda to get some servers going, it takes minimum 8 weeks. Now you can imagine if it's COVID situation, it's going to take you more than half a year. So what's the quickest way to do a service? It's just jump to a cloud. But now you jump to a cloud, you bring all these red flags, and the government is like, oh, hold on. There's a lot of data breach and everything. So there's a lot of from a demand and supply side from providers. Glad we have Visa, we have some people from cloud, and we also have the financials. There has to be a meeting point to where we can be able to meet and balance some of these needs. So it's an exciting time, but at the same time, it calls us not to sleep, because now the demand has changed completely.
Great, thank you, Kevin. I'm going to pull back to a point that you made just a moment ago, and Hartnell, perhaps I can bring you in and then go to Stephen. You mentioned about digital identity. Let's take that from a customer journey perspective, and we're talking about eKYC. How has that changed, and how has that fast tracked, if we want to use that? Let's start with Kenya first. Hartnell, any views on that in terms of eKYC?
Yeah, I think it's important, and when you speak about KYC, and we have to remember that we are doing two things here. We are making sure that our risk mitigation policies and procedures are in place to ensure that we don't onboard the wrong kind of customers. We are making sure we're complying to regulators, but we're also looking at the other side of the coin, which is we have to ensure that this does not make the customer unhappy, so that it takes a lot of time to access services or even be onboarded onto a platform, because we have to make sure that the balance between the value proposition to the customer and the risk is actually well maintained. So for Kenya, what we're trying to do is actually have a ballpark understanding of all the key different elements with regards to digital transformation. And I'm happy by just listening to some of the participants on the webinar, just to highlight what our understanding of digital is, and that will speak to how we are trying to make sure that KYC and straight-through processing is covered properly. So the first thing to understand that in data, in a digital transformation, the first thing is have your data right. Number two is have your tech right. And I'm happy that we have talked about cloud, we have talked about reusing commodity hardware, ensuring that we have the right kind of infrastructure to support the digital journey. Then we have innovation, which I think Salome spoke to. With regards to all these innovations, ensuring that we are able to make sure that the customer understands and enjoys having interaction with banks and other organizations. We have culture, which I think we spoke to, that if you're not able to serve customers better, if you're not able to train our staff to know that we are now in digital mode, we should not turn away customers like Darren and tell them it's not part of our policy, and go into actually ensuring that they are driving the right kind of culture. That's important. Then we have the people. So under people, you have leadership in digital transformation. You're having skills of the new age. We are having understanding that we have to reskill people to use new kind of tools, new kind of services to deliver digital experiences better. And the last one is security, which I think Kevin spoke to very eloquently. So when you're talking about eKYC, this now expands the part about the people, the process, and the technologies, whereby if you're actually going to change our brick and mortar ways of doing KYC, we have to start using and augmenting ourselves to identity organizations. So in Kenya, for example, we have IPRS, which has a database of all IDs and identifiers within the organizations. We have fintechs and other organizations that we collaborate with, who have already done the same KYC we are doing. So it's a good example I can give you. We are doing a mobile sprint whereby we are asking ourselves if we are really getting data from the biggest mobile provider and we are using the same phone numbers as a unique identifier, do we require a second level of KYC? So when you start talking about identity, number one, I think it's critical for the participants who are vendors to know that this is a very big business opportunity. I've only read articles that companies in UK and a bit in US actually have proper identity companies, both for the digital transformation, but also for number two, for data privacy. Because you'll understand that as a customer, as I keep on using different kinds of softwares, I'll be asked to sign and read the same policies and procedures. So if I have my data taken care of by a central and a unique company that knows all my unique identifiers that are there across all different companies, then it's easier for me to maintain my identity. I think for banks and organizations who are trying to ramp up or accelerate their digital transformation strategies, it's key to know that we'll have to know how to augment existing KYC information. Number two, we have to adopt data science, machine learning, and artificial intelligence. So for example, if you're really scanning documents, which are IDs and documents that are critical for verifying key information, then we have to use AI and new technologies to actually scan this information for us. So I've seen OCR readers by most business process management software, and also I've seen new technologies that are able to scan IDs and check that they meet all the mandatory requirements for an ID. But I think this is just a starting point. With augmentation of proper KYC reference data, so using either government databases, using other KYC databases, you've already done so. If you can imagine all the customers within the country, bank somewhere, if you can have a centralized view of just confirming this kind of information, it will really help us with accelerating this. But for the meantime, organizations by themselves, banks mostly, we can adopt and look at scaling up our KYC softwares to implement OCR recognition software, implement AI, come up with faster ways of ensuring that we are able to meet the KYC requirement under risk, but also ensure that we don't lose the excitement of the customer journey. And I'm happy, I'm just giving examples of other banks I've researched about who are able to do this either because they have been able to be born in the digital space, but they are able to onboard a customer, review all their loan documents, and disburse a loan in 25 minutes. And these are companies and banks in Africa. So it's good that the companies and the banks who have been around, I'm sure Kevin has said they've been around for 50 years. ABSA, we are riding on the back of 105 or 105 years of being present in the market. So we have to really know how to quickly transform all the 6 key areas of the digital transformation strategy, and particularly with regards to processes, procedures, and people, how they are actually handling KYC and validation checks. They should be able to embrace digital technologies and look at alternative data sources to embed or to skip or shorten the process used to actually check KYC requirements.
Right, Hartnell, thank you. And I guess before we just move on to Stephen, actually, Stephen, this is I'm going to throw a question at you here now. I know this wasn't on our briefing, but from what Hartnell was saying about perhaps having some sort of central repository for data, for KYC data, I guess the blockchain has a use there. Probably now is not the forum to talk about blockchain. That's probably a whole nother session, right? But Stephen, from your side in Tanzania, what are you seeing with eKYC? And you know, quickly, if you can, sort of summarize your view on blockchain, whether you think there is an application for that in KYC processing.
Okay. First, I have a bit different view on this because we are looking on this from the angle whereby we are not expecting the COVID-19 to be here forever, and we are looking on this situation on how during COVID-19 we are going to manage this customer relationship. And we are looking on the impact whereby the way you behaved during COVID-19 will make you relevant post that, or we might also end up affecting your market share. So we are not focusing on this level of perfections which need like 5 to 6 years planning. We are also focusing on some things which manage better these people during this time. So for instance, now I'll touch base on the eKYC system. We had the advantage that our national identification identity called NIDA has just had a database of the more than 26 million people registered in the national database. So in this area of the identity, we are working out on a mechanism whereby someone can do the eKYC just by being able to leverage from the biometric itself and be able to validate with the national and open the account. So we are coming out quite smart in that area. Actually, we'll be able to open a full KYC account remotely while sitting at home. Yeah, but I'm not going to expand on the area of too much on the data, on the what around that space for now. So for us, we are trying to take advantage of time because we are assuming the COVID-19 is something that we're going to live with for 3 to 5 months. And there is a special way we need to act on this area whereby the other strategy, we might go back to the boardroom in the next January and get things light up together. So the setup for us on this time is not that perfectionist kind of approach whereby we need the 6 years plans. For now, we are not working on that.
I think it's very difficult to make plans for next quarter, let alone in 6 years' time. Things are changing by the day, from what it seems like. Salome, I'd like to bring you into this part as well, because you obviously got a broad view across sub-Saharan Africa. What are you seeing as some of the trends, perhaps not just on eKYC, but generally in terms of some of the payments trends that are happening over the sort of recent period, and how do you see that? Do you have the same view as Stephen, that it's going to be 3 to 5 months, or do you think it's going to be longer in terms of some sort of normality?
I think things are going to change for sure. And from what we had been seeing even before COVID, a lot of transactions were moving online. So while we were accelerating contactless, now the being actually ready and doing contactless transactions has come to the fore, and it's become more important. So going to the future, I think a lot of this will continue, and it's the banks that are agile now, that are already servicing their consumers digitally, that are actually going to survive. Those ones who had sort of like leapfrogged or already having systems in place, they already had transformation journeys ongoing, like Hartnell has talked about. They will survive. This is not going to stop. 3 months from now, people are not going to go back to using cash the way they were right now. So this is going to continue. So then the investments that are going to that have been ongoing, I think suddenly maybe banks or different players might now start finding budget towards funding the digital pots more urgently than before. So this will just accelerate. So transactions such as QR payments that had maybe not scaled in our part of the world much as in other parts now are going to, because anything digital is going to stay. I also want to comment on the KYC piece. So banks have actually been in a very good position to have good data for existing customers. That's the one advantage they have over other payment players. And the advantage came by virtue of what the regulator has said. For someone to have a bank account, you must get this, and the whole thing about AML controls. So for existing customers, how do you then use that data to figure out that, Darren sends regular payments to the UK, and so how do I develop that channel more so that it's better and he's fulfilled? Or Kevin's type of customers, maybe they are more mass market, so how do I make sure that they continue to have their milk and bread needs met remotely? So this is not just about banks, it's about also everyone else on the value chain. The grocery store that previously relied on face-to-face transactions must figure out, how do I continue to survive because of COVID? How do I get my product to the consumer remotely? So as each business is trying to figure out how to stay alive, the digital transformation will have to accelerate everywhere. So I pay for my goods and services, but how is the fulfillment of it? How do the goods get to me? And the one way to do this is to scale with partners. At Visa, we've been doing that. So while we build some of the technologies, and when any technology we build, we are now actively creating APIs so that our consumers, our customers, our clients will have an easier time of plugging in and integrating and offering these services. And there's stuff we can do around identity verification and eKYC. There's stuff we can do around onboarding and getting that account funded. We can help on the secure remote commerce. On the business angle, where SMEs are we can introduce them to partners who will help close that loop. Like, for instance, in Kenya, how do the supermarkets who are doing 95% face-to-face business move to be able to do deliveries? Because we saw that piece suffering. I'll go online, I want to order my tomatoes, but then I get deliveries in 2 days. Yeah, so those are the pieces that are worked on now, and those are the trends we are seeing. In 2-3 weeks or even a month, that piece of work on fulfillment and closing the loop of the transaction is going to be done, and then going forward it's going to become the norm. Even after COVID, we expect these transactions to continue to accelerate. Yeah.
I'd like to come back in a moment to talk about the partnership side, because I think that's really important, especially when we're talking about customer happiness. But I just want to bring back Stephen. Stephen, I think you had a point that you wanted just to make on sort of the COVID situation.
Yeah, sure. There's something that probably didn't come out quite clear. So it can sound like looking on future might not be one of our key strategy, but it is. So there are two things that we are reacting to. We are heavily reacting on how to make a customer proceed to get service today, and we are typically focusing on what can enable customer to continue being serviced today. And we found like actually we have missed very big point in the prior data have showed us 90% of what customer want are very basic stuff. So we are having so much initiative to make the basic right, which are rotate around pay, transfer, and engage. Just that basic: pay, transfer, engage. Yeah. So you could find like instead of working on new solution, new deployment, new journeys, actually we find like increasing the limits in on our channels has been a very big limitation. People come to branch simply because even sending money via the digital channel has some limitation and all that. So you'll find like just by improving what you have, you can deliver so much more than even going through a new journey and all that. So, and then these things like onboarding, lending, and scoring, for instance, for us, for these people who are doing the top-ups, repeat, and all that, you have every information, every data, and everything. So just improving minor things, minimum effort on what you have is bringing out 90% of the effort, instead of having like journeys waking up on the new. That was on the basic that we are just doing right away. But now there are post-COVID-19 strategies that I think that what didn't come out right now. There is this what we call the behavioral change, and I always like to refer to Kenya post-election violence, because by that time I was a developer in Kenya in a company called JJ People. For you guys in Kenya, we were located somewhere in Ngong Road, Yaya, somewhere there. I remember how the M-Pesa succeeded during that time, and this is a normal behavioral science. So M-Pesa takeoff was at the result of that crisis. Am I right, guys? Yeah. So there is a behavioral change that is going to be a result of this COVID-19 stuff, and we are quite sure like people will move to the digital channel. So We are heavily focusing on 4 areas right now to cope with that. And first is to make sure every solution possible that can be moved to the digital channel is moved now, because this at this material time customer will use. Yeah, so the more you push right now, the more you have succeeded on that onboarding even in the future, because post COVID-19 customer will be too digital, and if you haven't moved in that direction, you'll be less in the digital engagement. And then we are heavily
Stephen,
managing that.
Just before you go on, I don't mean to be rude. Could you just summarize the last 3 points, because we want to move to a Q&A, and I've got one more topic we want to cover before we've only got 10 minutes left.
Yeah, so sure. The 3 more is to strongly manage the uptake, and then invest in the analytics, because now the more you have people in the digital, the more the analytics will work worse or better for you. And then the quick one, and the last is how effectively to implement the fintech partnership, because after you are having so many customers on the digital channel, now you can't have a lot of services innovated and revamped by you to those customers. So the partnership arrangement will help you giving those digital customers more option, more input, and more functionality. Yeah, that's what we are focusing on now. Thanks.
I'm pleased you finished with that last point, because that was my final question. Which just before I ask that to the panel, if any of the audience has any questions, and now is the time, if you could pop them into to the question box or the chat, please do. Actually, we've got a couple coming up. I'm just going to ask my last point, if we can keep this maybe 1 minute each, and then we'll go to the questions, if that's okay. So we're talking about partnerships and partnering with fintechs or partnering with other types of service providers, whereby you may be the corresponding bank, and ultimately liability sits with you. How are you ensuring that your partners are presenting to their customers and giving their customers the service levels that you're accustomed to in your business and your banks, and there isn't this disconnect? Because sometimes you're dealing with a fintech, and you see on the website or on the app that it's powered by ABSA or powered by Bank of Kigali or Visa or other service providers, and maybe me as a consumer, I'm looking down, hang on, okay, this is just a front end, but actually it's Visa or it's ABSA or it's whoever else that I've got the issue with. So where do I go? Salome, maybe I can ask you that question first, and then we'll just quickly go around the table, because there are quite a few questions coming through. Salome, can you hear me?
I'm sorry, I missed your question completely. I'm having a challenge with my Wi-Fi. Do you mind repeating? I only had a bit about scaling with partners.
Yeah, so when you're scaling with partners, and you've got maybe a fintech that's the customer-facing side, how are you ensuring that the service levels that they give to their customers are adequate, and that don't badly or negatively reflect on your brand if you're the rails or your bank behind that?
Yeah, okay, definitely. Our what we want now to do is definitely scale with partners, because we see ourselves as creating a marketplace, sort of like network of networks. So for any partner that we do bringing on board, they do have something to offer to consumers and the general market, and there's basic and quite elaborate measures we go through. Let me call them projects, to ensure that they give the services as required. So one, I talked about APIs. APIs actually help with integrations, and we also even give standards, like for instance, for QR payments, for both the consumer and on the merchant side. We do have like SDKs we give, and we make sure that standards are being adhered to. Also, there are certain basics around data and data security that must be looked into. So the PCI DSS standards are still necessary, PCI PIN standards are still necessary, and the partners will need to adhere to this. Other partnerships are also to do with even just checking that you do have the regulatory approval and the licenses wherever it is you're operating to do the business that you get to that you're operating. So that way we want to connect everyone, sort of like we build what we call a network of networks. So there's no other way for any bank to scale. Also, there's no need to have a lot of heavy lifting where you have a partner who this is their subject matter experts in the field. So when you scale with them, it's actually even lower cost in terms of capital investments for the partners or for the banks who then now come online and join the network and reap the benefits. But we certainly do not limit the requirements in terms of making sure that the end product to the consumer meets all the correct standards and our budgets are still maintained.
Right, thank you. Gentlemen, I know I always said I was going to ask this question to everyone, but there's a couple of questions that have come through from the audience that perhaps we should address more so than my questions. So I'm just going to ask the first one. Kevin, would you like to take this? This is, during the crisis, customers fear risk of losing connectivity on electronic and digital channels. We've seen people drawing cash, which shows perhaps a lack of confidence during a crisis like COVID. How are banks imparting that confidence? How are the banks imparting that confidence in such a situation? So, yeah, I suppose how are the banks trying to ensure confidence to consumers that actually these digital channels will remain sort of stable?
Okay, thanks. I think some of this problem. Okay, for us, we've not seen it as a problem. People drawing out large sums of cash. We still operate our banking halls on minimum banking services. I mean, branches. Maybe we've cut almost to 50% of our branch network. But as far as cash access on the ATMs, agents, and various channels, they're still accessible and with open limits. So we've not seen that problem, and the banking halls are open pretty much between 9 to 3 p.m., which before we were open from 8 to 9 p.m. So there's quite a huge shift of change. But also considering we have a curfew, so people can't do much after 8 p.m. However, we've seen more use on the various other channels, the mobile, sending money to mobile money or Airtel money, or so we haven't really experienced that as a challenge, considering that we power up part of the biggest ATM network, so they still pump as much as they were pumping before, and so we've not seen any much challenges in regards to that. And I think what I can encourage banks or different institutions is to be able to go to their customers, because we've gone back to the customers. We've given them the confidence to levy off certain late fees and a lot of concessions, basically, to help them walk through the journey, because some of them, their salaries have been cut. So we've been close to them. We've also been able to contribute quite a lot of money, maybe even more than 200 million to government to keep supporting various public initiatives. So we've been there for the public pretty much, and we've not seen that lack of confidence. In fact, we see more customers giving a vote of confidence that the bank were there for them, which is a good thing.
Right, thank you. And Hartnell, maybe you can just literally a minute, if you may. Are you seeing the same in Kenya? Are you seeing some concerns about the?
So I can build up on that. Thanks, Darren. I can build up on that by just saying that, yeah, it's true. I think since most of these initiatives are driven by the government, and as an industry, we are doing this together. So waiving of charges across digital platforms is something happening across all banks. But I think from the point of view of the attendee who asked the question, yes, they are actually a class of customers who still require a bit of convincing, and they are still defaulting to paper money, either because it's digital channels are something new to them, or they have not been used to this lifestyle before. So what we're doing three things. So number one, we're using the power of data. So any person, we are actually studying the trends on how people are moving to digital channels. So we are actually having daily reports and daily analysis just showing how is the movement to digital channels, what is the frequency, and we are using even probabilistic models, very simple pairwise comparison models on the probability of people moving to channels. And if you see you have a high probability, we're actually reaching out to you. So we are asking our contact centers to reach out to customers who are saying, we are seeing you using more of cash, but you're seeing that you already registered and you have used this before. Do you need any kind of help? Do you need any kind of assistance to do one or two things? Then number two, we have prioritized digital issues or digital incidents as high priority in our customer centers. So when people calling and the issue is all about, I think that I have a delay in getting some money, or I think that, are you sure that it's free? We're actually prioritizing these kinds of concerns from customers so it can create more confidence to them. So easily by telling them, just pull out your phone or put us on loudspeaker and we'll walk you through how to do it. Because we understand that the bulk of the customers understand that the times are changing, but there are few customers who need a bit of hand-holding, and we are working together with them, just ensuring that customer service is able to handle their issues, and we are also going to them and not waiting for them to call us. For the people we think you should be using channels, what is the challenge and how can we be of help to you?
Perfect. Hartnell, thank you very much. So listen, thank you. Salome, Stephen, Kevin, Hartnell, thank you so much for your time this morning. Please stay safe and stay well, and I hope to see you in your respective countries very soon, as soon as the flights open up again. This is the longest I've ever been in one location in my life, I think. So I'm looking forward to getting back on the road.
Don't wait for the flights.
Well, no, it's a bit of a long drive from Cape Town, you know, to Kigali.
Let's make the virtual connections. I think, you know, we see more that being more effective actually than having to travel. So the travels will not come up very soon. So
no, that's true. But listen, thank you again. Thank you to Seamless Africa as well, Seamless East Africa for putting this conference on. And if anyone would like to connect with any of the panelists, I'm pretty sure we're all on LinkedIn. Actually, I know we're all on LinkedIn, so feel free to reach out to us there, and have a good end to the week. Thank you very much, everyone.
Thanks, Darren.
Thank you, Darren. Thank you, Steve.
Right.
Yeah. Thanks, guys. Bye. Enjoy your day.
Thank you.
Thank you.
Thanks to all the panelists. So that is the end of the webinar for today. Again, thank you all so much for joining. The webinar will be accessible via our website for on-demand viewing. And if you do have any questions, please feel free to get in touch. So we've got our next session at 11 AM on Tuesday next week, which will explore responsible microfinancing and lending for SMEs and consumers. So thanks again for everyone, and we hope to see you next week.
Thank you.
Right.